My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Monday, ladies and gentlemen. It's the midweek of June. Look, it's a crazy world out there right now, and unfortunately we have to live through it. But look, we'll jump into the markets, we'll see what's happening, and I hope you'll enjoy this session, and I'll see you in a bit. All right, ladies and gentlemen, hello, and good morning. This is me, Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Monday, ladies and gentlemen, the 16th of June, 2025. So yes, ladies and gentlemen, welcome to this crazy world that we're living in right now. And well, I think there's no at the moment, there's not really much light at the end of the tunnel. Sorry to start this show as on a pessimistic note, but hey, this is what we're living through right now, ladies and gentlemen. We're going to talk about markets. We're going to look at what's happening this week. It will be an interesting one because again, we have a lot of things happening on the political side, on the economic side. So yes, about all this and a little bit more in a moment. First, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. I'm just going to put my usual good morning in the chat room. Good morning, everyone. So yes, good morning, everyone. Feel free to also write good morning. I mean, it just kind of tells me that I'm not alone here. Look, like I said, I was talking about all these things on Friday, and basically I was kind of telling everybody to, to be careful when going into the weekend and, having your positions kind of still running, because again, anything can happen. But look, also before we jump into everything, let me just quickly mention of Markets.com website, which yeah, you can always check us out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. So ladies and gentlemen, let's have a look at what's happening here. Look, the bit that is very interesting right now is the markets. I mean, look, we are seeing conflicts, we're seeing tensions, and the big tension is between between Iran and Israel, and of course, at the moment, everybody's worried that this could actually bring the market down. It seems like at the moment the market is not really believing in anything, that something bad could happen. On the contrary, I think the market right now is kind of thinking, you know what? I think there could be a deal reached, and I think that there's way too much is involved at stake here. That the two countries should not go into conflict unless maybe somebody decides to put troops on the ground, and basically it would be like a full-blown invasion. However, I doubt that. I think that at the moment the market understands that this a rocket exchange could be temporary, and that's why we need like a bigger economic event, like for example a press conference from the Federal Reserve Jerome Powell, which is going to happen on Wednesday, and everybody's thinking is going to be watching that one very, very careful. Rockets or no rockets, but the Fed stays, and it's important. So for now, look, I mean, the expectation, of course, is that there's not going to be any cuts or anything like that. But again, everybody will, like I said, will be glued to the press conference and to see what will Jerome Powell say. Now, at the moment, coming back to Nikkei, look, there's some positivity, beautiful rebound from the EMAs here. Everything's very technical, pushing higher. So far, so good. I talked about this last week. I said to you that if we continue to trade above the EMAs, then yes, a nice good push back up here could be possible. We could travel to the 38,771 territory again. That's the highest point of May. If that gets cleared, yes, I'm going to go higher because the forthcoming higher high will be confirmed. However, I would prefer to wait to see what's going to happen with this downside line taken from the highest point of July of 2024. If it breaks, then okay, great, I'll go further north. But if it doesn't, then yep, we need to take a little bit of a pause. Now look, in terms of Japanese data this week, tomorrow, BOJ interest rate decision. Now that's something that the market is very keen on because again, the bank is expected not to do anything. However, I think that the BOJ is really trying to figure it out, like trying to understand like how it will proceed further, because again, they will need to they will need to hike rates at some point because their inflation is a little bit on the higher side. Well, lately it came out at 3.6, if I'm not mistaken. Let me just double check. Yes, the headline inflation came out at 3.6, which is well above their inflation target of 2%. So that's why at this point, I think that the market is really trying to understand, like what will the Bank of Japan do in terms of what kind of stance, how will they say if, how quickly are they willing to go and hike rates? Look, at the moment, I think that they're going to just stand pat. They're not going to do anything because, again, the Japanese yen is a little bit on the stronger side right now, just purely naturally being the safe haven, and everybody's jumping into that one. So if you're gonna go and hike rates right now, you might strengthen it a little bit more, and basically then your exports will become a little bit less attractive on the global arena, especially to the one country which continues to impose tariffs because, well, it's too expensive for them. So that's what I'm saying. So that's why at the moment they're really not going to do anything and just going to, keep the rate at 0.5 here at plus 0.5%. So I think that that's okay for the market. Nikkei could continue traveling further north, but again, I think that we're all watching the geopolitical tensions, and I think traders and investors are also, especially Japanese investors are also looking at, what's happening in the world, because all other global indices might, if they suddenly start shifting to the downside, I mean, it will drag. Good news or not good news, I mean, it will drag Nikkei after it. Let's have a look, ladies and gentlemen. Let's have a look at China 50. Okay, China 50 is stuck. It's stuck. We got some data. This morning from China. So house price index dropped. Well, it did drop. It still remains on the lower side, but it improved from the prior. Industrial production, it's okay. I mean, it's 5.9 was the forecast. It came in at 5.8, lower than the previous, but still okay. Retail sales, well, retail sales were a good number here. And unemployment, look at this, 5%. So again, of course, everybody all the time says, how can we trust any of the data in general, like inflation numbers in the US, Chinese, let's say, unemployment numbers, then everything is, like I said, everything is really kind of has the shade falling on those numbers, of course, and on any countries, and we have to understand that. But does the market react to even those numbers? It does, yes. So that's why we need to be very careful. And look, for now, China 50 here, we're seeing nice positive reaction here. We're pushing back up. We remain above all the EMAs on our daily chart, so meaning that for now there is a good chance for this one to travel back up here. However, for me personally, I would prefer at least to see a push back above the 13,555 territory right here in order to consider some higher levels. Let's jump into the US. I'm looking at the cash indices, by the way, because I decided for now I'm going to be jumping around sometimes with the main index, between the main index and cash index, because again, it depends on the technical setups, and it depends on the structures, the way sometimes it looks more logical on one, sometimes on the other. So that's why I always encourage people also don't stick to just one kind of format, and just kind of no, look at things, look at other things, look at different things, because they broaden your horizon. And this way you can, for example, sometimes see something that you don't see on a cash index, you can see on the main index. Right now this one, you can see that the futures are moving here, and but the main index is, let me show you what I'm talking about here, neutral. So yes, Dow Jones here, we can see that we declined. It's basically still showing that we remain above all the EMAs on our daily chart. So this is a good sign in a way. So look, to simplify life in a way, we can also say that if we can push back above the 42,900 territory, that would be great. That would be some sort of like a positive note here. Maybe that the index, the bulls are still trying to fight here. So in a way, you can keep an eye on this. So this kind of removes a little bit of noise from everything. And if we do drop below all the EMAs on our daily chart here, then yes, I will consider a move lower. So yes, let me just jump back into my chart here. So this is the cash index here. Look, like I said, we rebounded from this EMA. Now these EMAs, all of them, and it seemed like we want to push back up, but like I said, this 42,900 zone, I need to see a clearing off in order to go higher. S&P 500, similar story, pushing back up. It seems like there's, like the market is shrugging off all the conflict fears, and we are seeing, a kind of a nice move to the upside in a way. I think that everybody's really, all eyes are on the Fed in a way, all eyes are on the Fed. Everybody's going to be watching the Fed. That one's coming out on Wednesday. So yep, it's going to be an interesting event in my opinion, especially the press conference, because look, the interest rate decision, it's a done deal. I think it's gonna just, let me refresh this page. Yeah, so the interest rate decision will remain the same, the same interest rate. I mean, they're not going to really do anything with it. It's more of the press conference that's going to be attracting everybody, and that's like half an hour later after the interest rate decision, because again, everybody will be watching carefully what Jerome Powell will have to say, how much he has been intimidated by the one person who has the power, a lot of power. And yeah, I mean, that's what the market will be careful about, how they will listen into his tone, and how willing is he to go and cut rates, because again, we know that this is what the White House wants, and this is what the Federal Reserve doesn't want right now. Because why? Because, well, you can understand. I mean, look, oil shot up, strongly to the upside, and basically that means that prepare yourselves for the June CPI reading, the U.S. June CPI reading in July, which is going to come out in July. That one to be on the higher side. So again, that's, like I said, and this kind of in a way is against going for all the interest rate cuts. On the contrary, it's actually considering more of a no cuts. So this is what I kept on talking about, and I really doubt that the Fed will stick to these 2 cuts by the end of this year. Look, unless they want to please, because if inflation, but that's only if inflation starts picking up, start grinding to the upside. So if inflation starts picking up, I mean, what's the reason for going for those cuts? What, to create more inflation? No, you're not going to do that. Come on. So it's like, that's what I'm saying. For now, we're expecting a cut in October, and then in one in December. June, July, September. Look, in September there was a forecast for a cut here, and it's like on the higher side. Again, let's see. Let's not rush into things. For now, let's just focus with the June meeting, and then we'll go from there. Look, for now, I think that this is what the market is trying to pick up on. At the moment, we're seeing U.S. indices rallying. They want to go higher. They want to go for those all-time highs, especially NASDAQ, which took a hit recently, but we're seeing that it's trying to climb back up. Look, if we pop back above the 21,800 zone here on the NASDAQ, I'm targeting the all-time high. A drop below the 21,485 zone right there could attract a few more sellers into the game. Oh, by the way, with the S&P 500, look, I will probably take a little bit of a conservative approach here, and I'll wait for a push above the current highest point of June, which was around the 6,069 zone. A nice good push back above it could attract a few more buyers, and basically the all-time high is not far from there. US dollar index very quickly. So yes, of course, another asset class to be watched when the interest rate decision comes out, because again, if we're not expecting any cuts, or we're expecting the rate to remain the same. We're not going to get a cut, yes, but we're expecting the rate to be the same. But we're also not expecting to see hikes. So at the moment, the US dollar is kind of stuck here, and it's more leaning towards the downside. And especially looking at this technical picture, I mean, look at this. The downside line, which is drawn from the highest point of February of this year, still remains intact. We're testing this key support zone, which I talked about. It's roughly between the 97.28 and 97.70 zones. And if we do clear this, then yep, I will go further south. In terms of the upside here, I would prefer to wait for a break of this downside line in order to consider higher levels. Let's jump into another index here, the German DAX, and let's have a look at the cash index. So we are also rebounding. Sorry, my nose is a little bit runny for today. And it's a little bit itchy, so yeah, apologies for picking my nose a little bit. So look, this is working out beautifully. I talked about this previously. I said that, look, keep your eyes on the 50-day EMA and this 50% on the Fibonacci extension, which is drawn from the lowest point of October 2023 and the highest point of March of 2025, and then to the lowest point of April of 2025. So basically, at the moment, it is working out, like I said, like a charm. So this 50%, which is not far from that 50-day EMA here, shown as the green line on my chart. So all this is providing fantastic support. And this is kind of, yes, pushing back to the upside. In a way, I would say I will get a little bit more comfortable with the upside if we at least make our way back above the 23,900. Or actually, you know what? Wait. I need to adjust this a little bit. I think I'm going to get a little bit more attracted to this upside scenario if we do push above the 23,735 territory right here. And then we'll take it from there. For the downside, I need it straightforward, to be honest. To drop below the 23,300 zone here would be needed, and then we'll go from there. Let's jump into FTSE 100. So the FTSE 100 pushing back up. We're near all-time high. It seems like it's a good chance of actually hitting the all-time high. Let's see what's going to happen there. At the moment, I'm sticking to the upside and I'm aiming for the all-time high. And hey, let's see what's going to happen there. Look, I'm going to shift my attention to some lower levels if we do drop back below the 8,825 territory right here, and then I'll take it from there. Let's jump into the Forex world very quickly, ladies and gentlemen. AUDUSD. So look, I'm not going to invent anything here. I'm just going to say the same thing, that I am still somewhat positive because we remain inside this rising wedge pattern. If you're thinking that it's a channel, no, there's a little bit of an incline, a little bit of a coiling up moment here. Very minor, but still a coiling up. So it's kind of more of a rising wedge-ish pattern. So look, according to all the TA rules, such patterns tend to break to the downside. However, this one's a little bit of a different one maybe because The prevailing trend was to the upside here, and yeah, it's moving higher within the formation, but I would prefer to, to wait for clearance of the upper side of this formation in order to go higher. At the moment, look, don't get me wrong, it could still drift higher while trading within this pattern, but if it starts breaking below this lower side of the pattern, of this rising wedge pattern, then yes, of course, I'll consider a move lower. AUDJPY, our risk on, risk off monitor. Look at this beautiful sharp reversal back up, and this is where the interesting bit comes in. This is our, like I said, this is our risk on, risk off monitor, and the market seems to be recovering. We're seeing this exactly, and however, I would prefer, for me, the scenario to the upside is very conservative here, a push above the 95.74, 75 zone ish. This is what would be needed in order to go higher, because at the same time we would climb above the 200-day EMA, and potentially more buyers here could join in. In terms of the downside, a drop below the 91.85 territory would be required. Jumping into NZD/USD, just another quick update here. So yes, continues to push higher. As long as we stay above this upside line, I'm leaning towards the upside. Let's jump into USDJPY. So this one's an interesting one because it's a kind of at the moment, maybe it's seen as a battle of safe havens, but I think the dollar is still on the weaker side, so Japanese yen could remain strong. And this is, like I said, this is kind of a good thing for the Japanese economy. However, good and bad, because like I said before, like I said in the beginning, it's great for the domestic consumer. However, for the attractiveness of the country's exports, no, not really. So especially looking at this USD, given that the USA is the main buyer of Japanese goods. So that's why it becomes a little bit of a difficult moment, especially in the current conditions where we're seeing these trade wars happening, where tariffs are imposed on various countries by the US. So yeah, when you also get a combo where the US dollar is kind of much weaker than the currency from where you're trying to buy goods, then those goods become a little bit more expensive for the US consumer. So okay, Japan. That's why Japan right now needs to kind of balance it out. Looking at this picture, I'm still bearish. I'm cautiously aiming to the downside. I'm aiming for that 142 territory, but if that gets cleared, I'll go lower. USDCAD, there we go. We cleared the upside line. We remain below the 1.3634 zone, and now I will say that I would prefer to wait for some lower levels. To be honest, look, I mean, as long as we stay below the 1.3634 zone, I mean, that's something that could still be a bearish indication, especially in the market where, in the environment where oil is pushing higher and is at risk to go higher. This, of course, would play out positively for the Canadian dollar. And again, looking at this, also the same story as with Japan. Canadian exports are to the US are becoming a little bit more expensive, and that's why less attractive. So maybe this is a good strategy by someone to kind of move production into the US. Anyway, let's see how this is going to play out, of course, but for now, I'm leaning towards the downside. USDCHF, now another currency which is getting stronger. But okay, Switzerland does not really export much into the US. However, on the contrary, it's kind of seen as a more of a stable country where you can park your money. I mean, it hasn't always been like that, so now, probably that's gonna stay like this for now. Look, from the technical perspective, I'm leaning towards the downside. I need to see a drop below the 0.8038 zone in order to get comfortable with further declines. For the upside, a push above this downside line, above the 0.8347, could do a trick for a few more buyers here. Let's jump into EURUSD. So look, continues to push nicely to the upside. Very well done here. We remain inside the rising channel. So even this barrier, the highest point of April of 2025 is kind of not really doing much here for this pair. We're focusing on this rising channel, so if we continue to trade within it, yep, the upside scenario is still possible. In order for me to shift my attention to some lower levels, a break through the lower side of this rising channel would be required. EUROJPY, very quickly, there we go, boom, beautiful move here. The euro is on the stronger side, and by the way, the euro will be getting the the EU interest rate decision, and yep, the year-on-year number is expected to decline from 2.2 to 1.9. The headline one, the core year-on-year number is expected to decline from 2.7 to 2.3. We're also getting UK inflation as well for May, the same story as with EU. We're also getting the UK inflation, which is also expected to decline a little bit. And speaking of UK, let's jump into GBPUSD very quickly. So yes, inflation is expected to decline, so this could play out negatively for the British pound. So keep your eyes on that one. The same story for the euro. However, my only problem is that it will play out negatively if we see the numbers kind of dropping below the forecast, even because again the forecast is already on the lower side. Maybe that has already been priced in. So you know. So yeah, for now, like I said, while we remain above this steep upside line, we could continue traveling further north. However, if we break that steep upside line, well, I mean, this could open the door some lower levels in the short run, because again, this would signal a change in the short-term direction. Let's jump into the commodity world. Gold. Look, I talked about this, and I warned you about this 2 weeks ago. I said I'm going to aim for the 3,430 zone first, and then we'll take it from there, because again, this is a strong, important barrier. If we can break that, I will go for the all-time high for the 3,500 or maybe above. But at the moment, we are dealing with that 3,430 zone. Let's see if the bulls have enough steam, or maybe we need a few more rockets. That's for this one to travel further north. Not that I'm encouraging this, of course not. This would be stupid from my side. What I'm saying is that if more shots fired at each other and between those two countries right now, then yes, gold could continue its journey north. Silver, let's have a look at this one, pushing back up. Yep, great. Again, so the same story as with gold. Basically, I think everybody's watching that. Where's my arrow? There we go. I think everybody needs, if every bull wants to see if there's going to be some more escalation. At the moment, what I'm just doing here is I'm just watching the current highest point of June near the 36.87 territory. We get a nice clearance of that one. A forthcoming higher high will be confirmed. Let's jump into oil. So oil has slowed down a little bit, so that's fine. We found good resistance near this downside line. I talked about this. This one's taken from the highest point of September of 2023. So we did pierce through it, but the bodies of the daily candles remain below it. So in a way, I would say for now I am leaning towards the downside in a way. However, like I said, watching carefully the geopolitical tensions, and of course, if those continue to escalate, then WTI oil could pop nicely above this downside line, and the next target for me could be the 79.36 zone, or maybe the psychological $80 mark. Natural gas pushing back up, but again, a confirmation push above the 3.83 is needed. Yep, pretty straightforward. For the downside, a drop below all the EMAs here on the daily chart would be required as well. Coffee, let's have a look what's happening with coffee. Rebounding near the 200-day EMA, that's absolutely fine, but I would prefer to see a push above all the EMAs here that I have on my daily chart, and then yes, I will consider a larger correction to the upside. Corn, let's have a look at what's happening. Corn, it's a little bit, yeah. Actually, corn, look at this, ladies and gentlemen. For those who are looking for some value or looking for a beautiful setup, look at this. This could be this downside line, and this could be this upside line, right? Okay. So what do you see? You see a nice falling wedge pattern. So according to all the TA rules, such patterns tend to break to the upside. However, while we remain inside the pattern, we could move in the direction of the pattern. So meaning basically we need a confirmation break. That's it. So if until then, just kind of be very careful and cautious, because we could still see, you know, this one drifting further south. Wheat, one of my favorite ones here as well. A beautiful hold up here near the 506 territory. That was back in mid-May, and since then we're flirting with these EMAs. So if we can push above the 200-day EMA, I'll go higher. Sugar continues to slide. Look at this. Continues to slide, and well, I mean, we are now, like I said, we've tested already the $16 mark here, and I think that this could continue further and further south. 15.87, that's what I'm watching here. I want to see if this highest point of February of 2020 will provide good support. But in general, certainly sugar becomes quite an interesting asset here. Maybe for going into the future. Cotton, also one of my beloved commodities here, soft commodities. So yes, it's pushing back up. This area is fantastic. The 64 and a half zone is, like I said, for providing fantastic support. We're pushing back up, but again, we're struggling with the EMAs. I need to see a push above the 50 and then the 100 in order to get comfortable towards aiming for the 200-day EMA. And finally, for dessert, ladies and gentlemen, just very quickly on the crypto world. So Bitcoin pushing, rebounding. Look at this. If you look how well this 50% on the Fibonacci extension is working out. This Fibonacci extension is drawn from the lowest point of August of 2024 to the highest point of January of 2025, and then the lowest point of April of 2025. So now we're, like I said, we're pushing back up. We cleared the 106.72 territory right here, and now it seems like we're willing to drift further north. And again, let's see if the question is, can we reach that 112 again? Bitcoin Cash is doing quite well, to be honest, pushing back up here. Look at this. 458 territory got tested, and we kind of are oscillating around it right now. So let me get rid of this downside line and actually maybe make it more of an upside line. So just to be a little more on the safe side. In terms of the downside, look, I mean, very straightforward. I think that it's better to wait for a break below this upside line and then kind of do something about it. But at the moment, it's looking quite positive. Ethereum is also looking quite positive, rebounding from the 200-day EMA, and but I need that push back above the 2,700, kind of an 800 zone, 2,800 zone. That's what I need. I need a clearance of that one in order to go higher. Ripple, let's have a look at this one. Beautiful push, beautiful rebound from the upper side of the fallen channel, which we tested from above after we broke it. And again, this proves my theory that I keep on saying, that look, whenever we break a trend line, we tend to revisit it from the other side, and there we go, boom, we broke this one to the upside. We're rebounding right now. The problem that I have that we remain below all my EMAs. I need to see a push above the EMAs, the 50 and the 100, in order to go higher. Litecoin very quickly pushing up here. Again, similar story, all the EMAs, let's clear those and then go higher. Dogecoin, kind of it's pushing back up, but we're stuck here in between the two trend lines. So yeah, just observing the price action for now. Polkadot, beautiful. Oh, look at this beautiful hold up near the 3.71 territory. Boom, pushing back up, getting closer to that psychological 4 level. Let's see if we can push above that, but I would prefer to wait for a move above the 50-day EMA here, shown as the green line, and the 4.18 zone, and then we'll take it from there. And finally, Tron. Look, okay, this one looks a little bit bearish. However, I would prefer to maybe maybe to see a push above the 0.2786, just to be a little bit more on the safe side. For now, it's great. I'm not saying anything. However, there is a good chance for this one actually to drop lower as well because it's forming something of a bearish flag here. Again, let's see if that's going to be the case. But for that, I need to see a drop below the 50-day EMA here shown as the green line, and that's roughly around the 0.2660 zone, and then we'll go from there. Ladies and gentlemen, that's a wrap. That's a wrap. Thank you very much for watching and listening. I really hope you found it useful. And look, I tried to fit a lot of information into a smaller time because again, I do understand that maybe 1 hour is a little bit too much, but I'm trying to, you know, improve on that one. So hopefully you found this useful. Thank you very much for watching and listening. I really appreciate your time, ladies and gentlemen. Thank you, your views, your likes, your comments, everything. So hey, I hope you'll join me on Wednesday, and I'll see you then. As always, 7 o'clock GMT time. Don't forget. Bye bye now.